Good morning to everyone, and welcome to QES Group Berhad's Q4 results briefing. I'm Shuain from Image Jiwa Communications, the IR and PR consultant for QES, and I shall be the moderator for today's briefing. Today's results briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagements with the investment community. For the first phase of the project, Image Jiwa Communications has been appointed as a third-party IR company to train and educate participating PLCs to conduct effective IR engagements. The selected companies for this program are PLCs that are less accessible to analysts and investors, but highly in demand based on the feedback received from the investment community. We wish to thank QES for participating in this project. The recording of the investor briefing and presentation slides will be made available for all on Bursa Malaysia Institutional Insights portal after the event. Today, we have with us Mr. Chew New Wing, co-founder, president, and managing director of QES, who will bring us through today's briefing. Without further ado, I will pass it over to Mr. Chew.
Thank you, Shuain. Good morning, everybody. Well, I guess I see a lot of familiar names. But still, I will probably just run through the presentation, maybe quickly on the QES. Wait, let me see. I go back to. All right, I believe all of you can see my screen and can hear me clearly, I hope. Now, let me run through quickly first. This is a usual disclaimer. And to most of you who are familiar, we have two major divisions, distribution and manufacturing. And it's a company overview. We started 30 years ago, 1991, and then we grew and we start all this manufacturing somewhere 10, 12 years ago. And now we are at the current position today. Quickly again, this is our organization structure. Myself, Mr. Liu, I think Mr. Liu is present today. And I have my key management team. I think Stanley is also in this call here. Distribution, you can see a category of product line: analytical, inspection, test and measuring, and materials and engineering solution. This is one big chunk of our products that we carry in the distribution. And manufacturing, we are very focused on semiconductor. So basically in that semiconductor range, we have inspection and measuring and automated handling. This just again a slide telling us the distribution in nature, what kind of application, which sector we are in, and who are our key principles regarding distribution. Quickly again, semiconductor, the whole plethora of product lines that we are doing, automated optical inspection, semi-automatic inspection, advanced metrology, and on the right-hand side is all the automated handling systems. Whether wafer sorting, wafer transfer, wafer packing and unpacking. So these are the products that we do for semiconductor. All right. So again, sampling of images of the products. I'm sure most of you are familiar by now. We started 2 years back or 2.5 years back, a Industrial 4.0 smart manufacturing, smallish division doing software, IR 4.0 solutioning. So this is an ongoing process, and I am hoping to grow this small team in the next 2-3 years. And sampling of what they are doing, smart vending solutions, smart security solution, IoT sensing solution, integrated warehouse management systems. So these are just some of the concept and applications that we are doing, and we are doing last year and a half. A lot of POC, proof of concept with our clients, and test it out, try to make it work and make it really usable, and also really automate some of these clients' current manual processes and all that. This slide tells us the key verticals we are in. we just pick up three main ones, semiconductor, E&E, and automotive. Actually, this is like, 90% of our business in terms of revenue. And you can see that manufacturing is basically focused on semiconductor verticals, whereas the distribution and the recurring income, spare parts and service, these are all in the different market segments of what we are doing. Coming back to numbers, I believe you have seen the announcement, so I will not go line by line. I would probably leave a lot more Q&A if you have, after the presentation. I'll try to quickly go through this presentation slide and leave more time for Q&A. Yeah. Again, these are just a different way of presenting, showing very good growth for QES Group from 2020 to 2021. I think we are already like doubling up our profit, so-called after tax. This usual highlights that we put up for in terms of the trending, in terms of the revenue and the profit before tax, and what kind of margins we are getting. Yeah. So to be fair, there's only one quarter that we are actually doing bad, which is Q2 2019. Since, I don't know, many years ago, most of the time our quarters are profitable. Yeah. This is revenue indicating the 2021 to 2020 to 2021 growth. Yeah. So all is very nice, very positive, I would say. Here again, cash and cash equivalent. So this is again showing a very strong financial position that we are in. Gearing ratio, in fact, our cash positioning is even better today. And these are again some of the financial highlights. Current ratio, earnings per share. These are all probably the whole of 2021. We are almost doubling up again, maybe 2.28 earnings per share. Yeah. Okay, this slide, usually I try to spend a little bit more time here. It tells us by country where we are growing. And you see Malaysia, we are growing strongly. ASEAN, also a very strong growth from last year, comparatively to, 2021 versus 2020. Now, you see Singapore, most of our orders are semicon driven. And just to share a little bit of insights, Singapore, I think we are getting a lot more orders from those semiconductor players in the 5G area. A significant chunk of the business come from there. Vietnam is recovering very well, so showing the good sign as well, even though we are in the midst of a heavy COVID-19 pandemic. For Vietnam, actually 2021 is worse than 2020. Yeah. Thailand, we are also recovering well, 36.3% growth. Philippines, and Indonesia, all these are recovery play. Basically, the last 2020 was bad, and 2021 we just recovered from a low base, especially countries like Indonesia and Philippines. Yeah. Of course, there are other ASEAN countries very small. Now, I just want to pull your attention to China and the rest of the world. Now, China, again, we are putting a lot more effort. I wish we can travel there, but until now we can't. So we are just appointing new distributors. We are getting a lot more digital traction, virtual meetings. So this type of activities, and we are securing some orders as well, even though we don't travel there. So it's a good growth, I would say, year-on-year basis. Rest of the world basically is driven by Europe. So we have a couple of key semiconductor clients in Europe where 2021 we get a lot more orders versus 2020. And I believe going forward, trend could be also better, I hope. This is a revenue breakdown by country, by region. So you see Malaysia is about 41, ASEAN is about 50, and the others about 8.5. So generally it's not hovering too far away from the last 3 years of what we are having here. By division, this is distribution grew very, very strong, 2021. So even though manufacturing grew a little bit, but the distribution just basically overwhelmed the rest of the revenue intake. So that is somehow also driven by semiconductor growth. This is to give some color into the different market segment that we are in. The dark blue is the semiconductor, the automotive is the light blue, and the purple is the E&E, and the others are the mining, the petrochemical, the oil and gas. So those are the different segments of our industrial classification. Now, I remember last quarter, I think if I'm not mistaken, David of Spiral Thinker, he was asking me this question, which I thought it was relevant. So I get the girls to pluck out some numbers to tell us, like within QES group revenue, where are these going into, in terms of within the semiconductor application. So I just table up. Now, I just want to put a caveat here. Because we do not know exactly the distribution of each customers, because let's say, for example, ST Micro, they might have maybe 60-70% into automotive IC, but the others are maybe different segment. But I will just base on assumption of primarily those customers are involved in automotive. Then I will classify them into the EV side. Whereas this, for example, Skyworks, they are all into 5G, or Unisem has got a different market segments. So, but quite a major in a 5G related. So I will just throw them there. Inari, for example, is 5G related. I'll throw them into that pie. Yeah? So this gives you some sense of where these applications are going to. And you can see that almost 45% is going to the automotive IC, which we are chopping up from both distribution, manufacturing, and also, of course, recurring income and materials. So this is where we classify, and then it gives us some insight where are these of our products or services is being applied to in terms of the semiconductor application. Because if you are familiar with semiconductor, there are players like especially, let's say you want to go to automotive ICs, there'll be people like Infineon, people like ST, people like Renesas, people like Carsem, who's working together with Wolfspeed, to really go into this power ICs relating to EVs and all that. And of course, memory microprocessors, there are people like Intel, people like AMD, those are the traditional microprocessors company. And of course, the generic opto sensors, discrete, these are a huge range of customers into that, whether it's TI or NXP or Nexperia and all that. So this is a rough indication of where our revenue goes in terms of the application. Yeah. So I just want to, give some idea on where our revenues are going within the semiconductor environment. This is the same slide that I used to show. Again, it's showing here, for example, the 2021, the AOI, which is automated inspection, is showing a good trending, even though it's still not as consistent that I want it to be, but it's getting there, ups and down, but overall trend, we see that there's a generic growth in terms of the automated inspection. The AHS is the automated handling, so good traction here. Of course, the semi-automatic is still the demand there. We never forget the semi-automated equipment, because there we are still having a lot of customers asking us to make a semi-automatic equipment. So we are still continuously delivering, manufacturing and delivering those. Yeah. AMS is very lumpy, meaning that one machine is about $1 million, $1.5 million, kind of US dollars. So sometimes we get 1 or 2 per year. Sometimes we get 0, like 219. Oops, sorry. Where did it go? Okay. And last but not least is the smart manufacturing, where last year wasn't too good. As I said, we spent the whole year doing a lot of proof of concept, but the restriction in terms of traveling is giving us a little bit of a hard time. We can't really, like my team in Penang, want to spend time in Johor, for example. It's just impossible with all that. So I think we hope that we can get this thing turned around into for smart manufacturing. Again, the install base, we are growing. Now it's already almost 12,933 machine install base. So this is the real source of our recurring income. Yeah. So that's where we generate close to 40 million ringgit yearly, very consistently with good GPs. Yeah. Now, to some of you, what really is QES advantages and strength? I just quickly run through very well established subsidiaries. ASEAN focus. We have very large pool of engineers and technicians. I think close to 280 people. And I pointed out just now, very huge install base of more than 12,000 machines worldwide. And we are now, after the IPO, we are spending a lot more resources on building new equipment, new processes to meet the semiconductor and E&E requirements. So there's a lot of extensive R&D. We got some private money to do that as well. And we are not, we are kind of not so focused. I mean, I've heard some investor asking me, are you like very wide customer base, and you're not getting a huge chunk of order from a very deep customer. But I personally, if you ask me, I prefer this model. I have a wide base of 3,800 customers, and I get all my customers, everybody is giving me about 10% or less than 10% of my revenue. I would prefer this model because it's very sustainable in the long run. Versus if I'm going to depend on 3 customers, generating 200 million, I'll be very worried. So I prefer to really work on a good base of customers. And last but not least, we are a one-stop solution provider. So this is a strength. We have economy of scale. Most of the big multinational customers really likes QES because we've been around for a long time. The brand name is there, and we can actually help them. So to speak, yeah. Some of these are repetitive, but it's more detailed. Diverse products, market segments. Very key to us as well. Stable recurring income. I pointed out just now. Regional presence in the ASEAN market. Of course, we plan to expand to China and also the other part of the world through our sales channel partners. I'm still running the show for a long time, but I think we are also building a lot of key management people to hopefully have a succession planning in the long run. Strong financial balance sheet, extensive R&D. So this in case you see that why should you invest in QES? So these are some of the investment merits that I think or we think that is of importance. Yeah. Quickly, corporate updates here. Now, all of you know, I've said since 2 quarters ago, we have starting to do the renovation. It was delayed, but anyhow, we plan to move in by end of March. So the building is almost ready. I wish I can extend invitation to all of you to someday come and visit us, the new facility. We have increased manufacturing space and also office space. And this is a good thing, I would say. In terms of the second update on our joint venture company, we will have the opening ceremony on the 9th of March in Penang, Padukawan. So there's like a list of VIPs that we're inviting to open up the factory. And we have our US partners all flying in by early March. And hopefully we will have this production readiness by March, and we will start the product transfer from US. Just to share a little bit, I think we got some smallish orders recently from a a medtech company in Penang, where QES is really pulling these clients to this joint venture. So I think that's a good development. And further, in terms of the 2 acres land, we already paid 50%, and I hope to start looking into appointing the contractors, and we will start the construction somewhere second half of 2022. All right, so that is relating to Batu Kawan. And continuing on that, some of you may know I made some statement in the press and all that. So we will have, approximately, I do not know the exact figures, 90 to 100,000 square feet. And the moment we move in, we plan to staff it to close to 100 staff, because it will hopefully house our second factory of QES Mechatronic, our Penang team, which I hope to grow, the Industrial 4.0 Smart Manufacturing team, and our distribution unit, and possibly the expansion of AETM, where we see a lot of potential in the long run because of the outsourcing by all these big multinational companies, be it in semicon or medtech or aerospace. A lot of you may ask me, why do we want to expand to Penang? I've mentioned very clearly the last quarter. Similarly, I just repeat again that we want to leverage the matured supply chain in Penang, and we think we can develop better machines together with some of our clients already there. And the joint venture also will help assist us in continuously developing better equipment, especially in the front end, which we have intention to go into at some point of time, and to grow the QES Vision team. That is really very, I would say, very relevant in terms of Industrial 4.0 and smart manufacturing. And this manufacturing division, only changes here is we are ready. The wafer inspection AOI, the PPI series, which has been long delayed, prototype is ready. I have some pictures to show you, and if we have time towards the end, maybe Alicia will show a video as well. So, but not forgetting the distribution. Last year was a very, very good year for distribution. We had strong order intake from semiconductor. As I said, Singapore and Malaysia, these are the big front-end wafer fab. They're buying equipments, even though the delivery time is very lengthy, but they're still going forward to purchase all this equipment. So, that is, I've seen so far, that is the best that we ever got for distribution division last year. Yes, as I said, I asked the girls to pick up some picture on February 13th downstairs here, and this is our fully automatic wafer inspection. Software is almost done up, and we're doing some touch up. So I think we are ready to do some wafer samples with our clients, and hopefully we can actually ship this out for demos and all that. Now, for 2022, we have a backlog of orders. I think more than close to 92 million, 91 point something, if I'm not mistaken. Distribution is about 81, 82, or manufacturing is about 9 over million. So that is a backlog. So definitely it will be shipped out in 2022. So I can safely say that, more than 92 million of orders will be recorded as billing. And looking at January and February, the order intake is still strong. We get still getting orders from semiconductor players, both in the ASEAN region as well as in China. So that gives me a very optimistic outlook for 2022. We're seeing the momentum is still very, very strong. Now, based on the 2021 results, subject to meeting all the requirements and all approval from the board, the relevant authorities, we plan to migrate from ACE to main. and the timeline given or so-called projected maybe by third quarter, because we have to apply, do the submission after the audited accounts, which normally around April, and it will take a couple of months before we get approval. Of course, subject to all the requirements that we met. Now, going forward, some of you may ask, is this expansion, is it feasible to have all this expansion and trying to capture the semiconductor and E&E markets and all that? Now, I think, we have a good, still very good future ahead, and I will proceed with try all these plans that we have laid down. The 5 years roadmap is of course dynamic, because every year there'll be some updates. So I did that since 2018, then we keep on progressively updated. So we are targeting to really build capacity and capability on manufacturing. And we think this will yield positive result for China, especially second half onwards. And I think they generally, like you ask most of the players within my peers or our industry of semiconductor and all that, most of them will tell you that the next couple of years it's always going to be trending upwards, based on all the reports, based on all the forecasts that you can get it out from the Semicon or Semicon Digest or IC Insights and all that. So I think we are in the right space of expansion, put that way. Not forgetting, this since we are migrating domain, we also have to really spend effort and time to relook into the ESG requirements, which is kind of the key words now. So, but we have been doing indirectly, we have been doing that already. So some of you who are not sure, I think we are actually distributing a lot of equipment relating to the WEEE and Roche analytical instruments. This is where our equipment helps to monitor what kind of hazardous elements that is affecting the environment, affecting the consumers. So we have installed more than 1,600 equipment already around ASEAN, to do this kind of work. Our engineers are maintaining this equipment year in, year out, and make sure our customers have a proper machines to monitor this in their products. So this is where we have been contributing for many, many years already. The new office, we are doing the rain harvesting system, even though it's a small thing, but I believe it's important. And the full digitalization of QES Group already started 3 years ago. I think we will, use a lot less paper. That also hopefully can make the environment better. And we are going to spend, I think it's about close to 900,000 to install the solar panels at our new site here. That again, based on the vendor's projection, we are doing to improve the carbon footprint, in the long run. In terms of social, existingly we are already at 30% female, 30% male, so for the entire group. So there's already a gender, and of course in Malaysia we have 30% Bumi, so it's already a ratio. So both gender and racial diversity, we have this already meeting the requirements, or so-called floating towards that. Some other countries. We do a lot of so-called social works in terms of contribution, and recently the flood victims, we did some work on that as well. With a new place, and hopefully in Penang as well in the future, we will have a clean, vibrant and happy environment. We are also ensuring our ASEAN offices, whether in Singapore, Thailand, Philippines, Indonesia, Vietnam, all these people are working with us. Hopefully they are also feeling the impact. We are doing a lot of renovation, a lot of sprucing up the places, the demo rooms and all that. So that is again the employer's part to ensure our employees are being well taken care of. In terms of governance, I think you see it. The chairman and myself, a separate function and role. We have 4 independent directors, only 2, Mr. Liu and myself, are the executive directors. And I've been doing this investor relationship updates, investor so-called briefing updates since we IPO'd. So I've never missed a single one. So that's where our commitment to make sure our shareholders or our stakeholders are being updated continuously. Some of the pictures here, on the left side here, we are building, this is a clean room. So that's where we can build a clean room type of equipment there. So it's a small, maybe about 1,002, but good enough. Yeah. And this is the manufacturing floor, just to share. And this is the facade and our demo room. This is another view of the facade. Here, it's just been up. I recently went to a press conference that organized by Invest Penang, where they have a chief minister of Penang also attending. Together with me was JHM Consolidated. Of course, QES is a small boy here, so but we just have to be there since they invited us. Yeah. Again, some pictures here and private placement, just an update where we are and all that. So I'm sure most of you have all these reports. I'm not going to run through it. It's all there. I prefer to spend time having a Q&A. Yeah. All right. Thank you.
All right. Thank you, Mr. Chew, for that insightful presentation, and congratulations on your financial performance for 2021. So now we open the floor for Q&A. You may unmute yourself or post your questions in the chat box, and we'll read it out.
While these guys are asking or trying to ask, maybe Alicia, you want to just quickly run that video of that the PPI?
Sure.
Just a quick one while waiting for them to. Some of them might want to type in the chat, or some of them might just unmute and ask. So. Sorry, David. I think we'll get back to you shortly. I saw you raise your hand, but I'm just getting Alicia to show that video. Quick, just I think it's a minute or minute plus only, that video, because this outstanding thing is I committed and I have to deliver. Yeah. So even though it's delayed by a year and a half, so we had some issues with the software which are updated every quarter. But now I think we are ready. Yeah. Any problems, Alicia?
Yes, hold on. Please give me a moment.
Or if some of you, while waiting, you want to ask any questions, feel free to type in the chat box, and then I will pick it up from there.
So, Mr. Chew, I have a question that's been directed to me. The question is, what's the reason for the low margin from manufacturing in the fourth quarter of 2021?
I think one of the factors is, of course, the product configuration and mix. So the Q4, we are supposed to deliver a high margin item to China, but that couldn't make it. And that value was a huge one. And that margin is much better. But in terms of the others that we shipped out, those are the semi-automated, post-wire bonding inspection system, the ISP series. So those are a little bit lower margin. So it's just a configuration, a mixture of products.
Okay, so I think while Alicia is getting the video up, how about we take the question from David?
Yeah, David. Since we have time, I think my
Yeah.
Alicia is having some difficulty.
Hi,
Yeah, David, go ahead.
Mr. Chiu, good morning. Can you hear me properly?
Yes, I can hear you.
Okay, good. First of all, thank you very much and congratulations on your fantastic result. Yeah, and I would like to personally thank you for the slide as well. It's very informative. I guess that it's not easy to come up with those kind of estimation, right?
Yeah.
I would like to pick up another question that I asked a couple months ago. I remember you mentioned that the AOI series, you have a lot of confidence that once it gains traction, right, you are targeting at least 3 times to 5 times the sales from these machines, right? And I can see that the results are starting to show from one of the slides just now. Maybe can you comment on this? Is it just the beginning, or you see more demand for these machines moving forward?
Yes, I think certainly we are spending a lot of resources, R&D resources to develop the AOI series. So we have launched some that is really a certain application, but at the same time we also fine-tuning our existing machines. But it's also getting competitive. So many players are jumping on board. Of course, my peers, listed entity, and even the non-listed entity, many are jumping on board in terms of this AOI, but the market is big. So we think that with our strength of delivering semi-automated machines, we can convince customers to upgrade to a fully automatic machines. So that's always our coverage, so to speak. And we also think that we want to give a kind of a choice to our clients. Sometimes the feedbacks we got from them is like, do I have to buy from this 2 US giant company that is costing them $1 million a tool in the US dollars? So now with this PPI series, we think they are given a choice, so they can actually have a machine that is hopefully cost effective. The cost of ownership is better. Because we target to sell it within 600, 650,000, that kind of range. So we think the correction, once we move it out, hopefully the next 6 to 9 months we'll see some results on this new tool. But not forgetting, we also have a lot of existing tools, the post-wire bonding 2000 series and the PDA, the one that we designed and try to meet the so-called those people who makes semiconductor ICs for automotive. They have specific requirements, do a 6-sided inspection, and we're trying to make that as a catalyst, but it's a little bit slow. From the last, I tried to 3 months onwards, the customer has not really placed a repeat order, but we are expecting one coming up soon. So that will all translate into, I think, a better AOI series results in the long run. So I hope that answers your question, David.
Yeah, thanks. This is the client from China. I'm trying to cross-reference for my notes previously. Is this you talk about the 6-sided inspection system and the PDI. Is this targeted for the Chinese market?
No. This is was developed in Malaysia together with the local Malaysian client. But we think that we can duplicate it in China market. But in fact, we tried. We're supposed to participate in one tender, but we did not get it. So we lost it to another Malaysian player. That was a little bit of setback. So I just want to share with you.
Okay, thanks. I have another question, but probably you can push this towards the end because I would like to have your opinion on the outlook for this year for the automated testing machines market. At the back of this high interest rate as well as inflationary regime, right? As far as QES is concerned, how do you see the outlook? But you can push this towards the back when you wrap up. Thanks, Mr. Chiu.
Sure. No problem, David. Thanks. I see that Shuwin, if you don't mind, I can see the chat here. Hafiz Mahmud, asking a question like, any of your products involved in wide band gap based on semiconductor supply chain? I believe you're talking about the silicon carbide and the gallium nitride base kind of application. Hafiz, am I right to say that?
Yes, correct.
Yeah, so this is definitely where we are also supplying solution. Besides our manufacturing product lines, we also have a lot of products relating to that in the distribution side. So last year, I was sharing with all of you that the distribution side gets lots of order from semiconductor, and this is relating to this type of applications where our customers are the front end players, wafer fab foundries or direct manufacturer themselves. They are increasing the production for this type of wafers, this type of application in relation to the demand that they foresee in terms of electronic vehicles or battery electronic vehicles, so to speak. So I hope that gives you an idea.
Sorry, Chusan, I can play the video now.
Oh yeah, by all means, yeah. Thanks, Alicia. Yeah, just a sampling of what our machines are. Right now, we are doing a lot of fine tuning. So I think by the time we move to the new office, maybe around April, if some of you want to have a look, I think we can actually accommodate some of the visitation by then.
Okay, are there any other questions from the floor? You can unmute yourself or you can post your questions in the chat box.
While waiting for some of them, maybe I'll just go ahead and try to address David's question just now.
Sure,
Now,
Mr. Chu.
yeah, he was asking, with the backdrop of the so-called inflationary measures, and also, I think the Fed also, the US, the market is pretty bad out there. Now, whether it affects any of the ATE equipment makers in Malaysia, in terms of QES point of view, as I said earlier on, January, February, we still see a good order intake momentum from semiconductor. So customers are still basically projecting a ramp up. I guess it's because of the demand is still there. Whether it's BEV related, or whether it's 5G IoT related, whether it's edge computing, all this is still there. The demand is still there. Even a lot of people were speculating the DRAM market is going to falling off the cliff. We don't see that, even though it's a slight dip, but then it went back slightly up, more stable. So I don't see that demand is falling off the cliff. And most of the technology companies, I think you talk about share prices, they'll be up and down based on valuation, based on all that. But in terms of the real market demand, with the backdrop of interest rate higher, I don't see that it will affect a lot of us here, because some of our projects order already received. We are supposed to deliver, And as I said earlier on, we have 91 million to be delivered. So it's almost like half of what we have achieved already. Now it's only January and February. So you just imagine that along the way, if we get more orders, then hopefully the supply chain issues are being addressed towards the second half. Then hopefully delivery lead time can be back to normal. I think we can deliver in a normal delivery lead time rather than now, which is sometimes is double up the delivery lead time. So I think, to your question, it may not impact most of the ATE equipment makers in terms of inflationary rates. So I hope that gives you an idea, David. I see that Hafiz also follow up with a question. Do you support companies like ASML or Lab Research? Definitely Lab Research, we are working with them already, but to the question of to how big and how small and all that is an ongoing process. I'm not at the liberty to divulge details, but we definitely wanted to work with all these people. But ASML is different. ASML is a Dutch base, and I don't have any so-called business dealing with ASML. They do outsource some of the modules, precision modules and all that. The AE joint venture may look into that in the future, but at the current moment, in terms of QES, I don't supply anything to ASML. But in terms of the AE joint venture, possibility are there in the future. So I hope that addressed your question, Hafiz. And Chiani, from asking how many months of order visibility do you have now? Order visibilities, as I said just now, we have a backlog of about 92 million. Delivery lead time is, 4 or 5 months. And some bigger orders are more complex orders, maybe even extend to 6 months delivery lead time. But generally, some of our distribution orders, I can deliver within 2 months, 3 months, so, but some 4 or 5 months, so depending on what type of product lines that we are in. But on average, yes, I would think 4 to 5 months is a safe bet. So I hope that answers your question, Chiani.
We have another question from Max. He asks, what is your current book-to-bill ratio?
About 1.1 something, the figure up to 31st of December. Manufacturing is 1.1. I think distribution is 1.2, if I'm not mistaken. So I hope that answers Max's question. Then you have, let me see, Hafiz again. Do you get orders relating to EV battery manufacturing lines? Good question. We don't really get the EV battery manufacturing lines at the current moment. We don't have any requests. We work generally with the semiconductor, the IC, relating to the automotive IC makers that we buy some of our equipment in terms of the manufacturing parts, but then not the EV battery lines. Lee Chung Cheng, do you think that the existing supply chain issues lead to overstocking in the immediate future? Now, it's a good question because for many years, I'm in this field. If I remember correctly, maybe more than 10 years ago, all these semiconductors is like this. When the demand is there, everybody makes, and then it becomes overstocked. And then the next year, it's just falling off the cliff. Those were the days, But today is slightly different because the demand is keep on extending. This super cycle of semiconductor growth has been there since 2.5, 3 years ago, and it's still growing. So, like it or don't like it, the COVID-19 also accelerated the demand in terms of all this digitalization, in terms of demands. So I believe that it will continue. So I don't think there's any overstocking issue in the immediate future. Even as I alluded to a DRAM market situation, I read some reports that maybe the DRAM prices will be, going down because the supply is overwhelming the demand. But then it did not really happen to what the forecasters are predicting. So in one way or another, the demand is there. So this is what I see it. If you ask me, whether any overstocking issue, immediate future, maybe not so, but I cannot say that it's going to be infinite. So at some point of time, but generally, if you ask me, there'll be blips up and down, but overall trend is still going to be upwards going. So I hope that answers your question. William, do you already mention your manufacturing background as part of it? Yes, the manufacturing is about 9 million. The distribution is about 82. So that is the configuration between the manufacturing and distribution. So I hope that answers your question, William. Can you guide on FY22 overall net margin? What do you mean by that? Net margin is what, in terms of absolute value, in terms of percentages? I hope you can be a bit more specific, but I don't. Okay, the percentage. I don't usually give a guidance in terms of profit, but in terms of margin, on the average, manufacturing will be about 35%. Distribution is about 22-25%. So that is the net margin for our business. The recurring income is usually around 30. So that also a big contribution because, as I said, 40 million a year with 30 to 35% margin for recurring income is a good business for us. So that's the margin percentage that you can get. So I think
hope that answers your question.
Sorry.
No, I hope that answers your question, Chiani. I wanted to say that if there's any further questions, I think we can take about one more before we close the briefing.
Yeah, I think before anybody asks, maybe a lot of them are just always, I get this type of questions that, what is my outlook for FY2022, I think generally there are a lot of people here wanted to know, of course, they are investors and all that. Now, as I alluded earlier on, our order book and backlog of orders is strong, 90 million. So we are chalking up orders even as I'm talking now. So I think that will contribute to the new order intake to add on to it. And we had some meetings recently with our key management. I would think manufacturing 2022, I'm targeting a huge growth. Last year wasn't a fantastic year for manufacturing. A lot of delivery has been shelved, and then our China plant has been kind of disrupted because we can't really do a lot of aggressive move. And I hope 2022 we can see better results from all these fronts. And based on the forecast given to us by our customers in Europe, I think manufacturing will do much better than last year. So I'm thinking a combination of our existing equipment making manufacturing plus the IR 4.1 smart manufacturing and Penang side. We hope to generate at least 50% kind of growth from 2021 in terms of manufacturing. In terms of distribution, last year was a record year, very, very good growth. So we have a mix of different business units having different growth targets. Some felt that they have grown too much that they don't think they can achieve that kind of growth. So then, but overall, when I look at the blended growth, distribution will still get close to 10% kind of growth easily. So that's why I'm quite positive, quite optimistic of 2022 to really move forward. And with our increased workforce in terms of R&D and also the new manufacturing space, we think that will even give us better impetus And 2023 is meant for the Penang expansion, because when we do the factory in Penang, it's going to take me a year. So I think that will only come in 2023. But 2022 is based on existing capability. And we are really moving very strongly towards China customers. Just to share a little bit, we have some orders like January, February from our newly appointed distributor, even though not a big order, but it's a good start. It's close to, if I'm not mistaken, close to 350,000 US dollars. So that is also I like that order because it gives us a exposure to a domestic China semiconductor player. Because QES is always getting all these orders from very established big multinational customers, which is good. I don't say that's no good. That's very good. But in terms of China, the growth is very different because they have a lot of these smaller and either they are local names, local domestic semiconductor players, but they have the means to acquire sophisticated equipments from us. So we are getting some traction there. So I hope that will help in terms of business. And with the launch of the PPI series, I think we can additionally get more results in the coming months. So all in, I think 2022 will have some growth within QES. Yeah. So I hope that addressed some of your queries if you have.
Thanks, Mr. Chiu. Since it's almost 12 and we haven't gotten any more questions in the chat box, I think we can close this briefing.
All right. Thank you.
Yeah.
Thank you everyone for attending. Appreciate it. And I hope to see you all in the new factory at some time. All right. Bye-bye.
If you have any further questions, please feel free to reach out to us at Image Jiwa. On behalf of QES and Bursa Malaysia, thank you for attending today's briefing. Stay safe and take care, everyone. Thank you, Mr. Chiu and team.
Thank you.